When people imagine wealth building, they see a Hollywood movie. They picture a room full of people screaming at computer screens, pulling off a brilliant high-stakes trade at the exact right second to beat the market. This vision of wealth is a mirage. In reality, financial empires grow in absolute silence, through years of doing almost nothing. To build that kind of foundation, you need to follow a 4-step daily protocol. This is the Boring Wealth Operating System, a set of habits designed to stop the bleeding and start compounding capital. This routine is painfully repetitive, but it is mathematically superior to the frantic trading favored by the crowd. It focuses on capital preservation through structure rather than luck. Investors usually fear the financial hurricane. They worry about the rare, violent events, like a total market crash or a bad startup investment that wipes out an account in 10 seconds. But most houses collapse because of termites. These are invisible habits, like mindless scrolling or the urge to buy status items to impress neighbors. They just sit in the dark, taking microscopic bites out of your wooden foundation 24 hours a day. Identifying and destroying these invisible termites is more critical than trying to predict a rare macroeconomic hurricane. If you fix the habits, the foundation becomes impenetrable. Step 1 is the complexity filter. The traditional education system rewards complexity, conditioning students to believe that simple answers are beneath a high intellect. Capitalism follows a different law. The market awards no bonus points for difficulty. $1 earned from a simple business that sells chewing gum buys the same amount of freedom as $1 from a complex biotech startup. Warren Buffett built his empire by looking for 1-foot fences to step over, rather than training himself to jump over 7-foot fences. He keeps a physical tray on his desk labeled "Too Hard." If he cannot understand how a business makes money or what its industry will look like within 3 minutes, he drops the paper into the tray and forgets it. You must create your own too hard pile. If a cryptocurrency pitch or a side hustle can't be explained to a 5-year-old in under a minute, reject it immediately. Long-term wealth is defined by the disastrous mistakes your ego allows you to avoid, not the complex puzzles you manage to solve. Step 2 targets your consumption. Information has a half-life. A news headline today is often irrelevant by tomorrow afternoon. Investors consuming this temporary noise burn their cognitive bandwidth on data that will soon be worthless. Permanent knowledge includes disciplines like human psychology and business history, topics that maintain their value for centuries. This image shows the intellectual engine of Berkshire Hathaway. It is the boring act of sitting in a quiet room and reading 500 pages of annual reports and history every single day. Delete the ticker apps. Dedicate 1 hour every day to reading material completely disconnected from the current news cycle. Reading a boring financial report today might not help you tomorrow, but 10 years from now, your brain recognizes a pattern that a frantic trader cannot see. This is the silent compounding of knowledge. Step 3 addresses action bias. When a portfolio drops, the brain feels a biological urge to do something, to sell, buy, or change the strategy just to relieve the anxiety of sitting still. The financial system is designed to trigger this panic. Brokers and platforms profit from transaction fees, meaning they only get rich when you move. Success requires the patience of a crocodile. A crocodile sits motionless in the mud for weeks, conserving energy until a high-probability opportunity arrives. Try this challenge today. Sit in an empty room with a blanked piece of paper for 10 minutes and do nothing. Your brain will manufacture emergencies to get you to leave. You must sit through that panic. Mastering physical stillness is the ultimate protection against the anxiety of the crowd. It allows you to hold a great investment while everyone else is selling in a panic. Step 4 is the lifestyle freeze. Lifestyle creep occurs when a person immediately upgrades their house or car after a raise. They are forging golden handcuffs, trading their future freedom for a temporary sense of status. Think of a saved dollar as a soldier. Invest it, and it works relentlessly, recruiting more soldiers for your army over a 20-year timeline. Spending $10 on unnecessary luxury murders the $100 that capital would become through compounding. This steals your future freedom. Freeze your lifestyle at your next raise. Convert 100% of that surplus money into permanent capital assets. Maintaining a modest lifestyle while your income skyrockets is the fastest mathematical path to ultimate freedom. It keeps your ego in check and your capital growing. To protect this system, you need an inner scorecard. Most people live by an outer scorecard, choosing careers based on what will impress the crowd. Every night, perform a mental audit. Ask yourself, if the world was never going to find out about my financial decisions today, would I still be happy with them? Use this daily checklist. Did you filter complexity? Did you read for permanent knowledge? Did you practice stillness? Did you freeze your capital? An inner scorecard makes you immune to the manipulation of society. You stop performing for others and start building for yourself in total silence. Building wealth requires the discipline of a marathon runner rather than the speed of a sprinter. It rewards those who can endure a long period of boredom while others chase excitement. Pick one tiny habit to implement tomorrow. Throw one complicated idea into the too hard pile, or invest $5 instead of that luxury coffee. Over decades, the silent accumulation of these boring choices creates a gravitational pull. Eventually, wealth and freedom have no choice but to flow in your direction.